But now we have a situation where the Bank of England has completely misjudged the inflationary effects of the price level of all this money printing. As indeed, I mean, you've got a cohort of central bankers. They meet at the Bank of International Settlements every 2 months. They stay in contact with each other. They are in a groupthink. Every major central bank made exactly the same mistake. And if you look at the statistics that they put out, their expectations, they're all going back to 2% inflation, except instead of it being at the beginning of 2023, it's going to be in the beginning of 2024 or whatever. So, this is a groupthink problem. It's not just the UK. We've got it in spades. We have got it in spades partly because we are next door to Europe, which is another level of risk entirely. I mean, it really is. When you look at the policy problem that the Bank of England faces, it's only got two weapons in its armory. One is interest rates. And I can tell you that interest rates have got nothing to do with managing the quantity of money. And the second one is the quantity of money, which it manages through quantitative easing, a lot more than it manages through quantitative tightening. We've seen a tiny bit of quantitative tightening with a few bonds running off the book, maturing, and I think the Bank of England sold a few, sort of small amount of corporate bonds into the market, but that's about it. I mean, basically, they can only go one way, and that is reduce interest rates and print debt. That's all it's got in its armory. We now have a situation which is calling against that. It's got to raise interest rates. Why? Not because interest rates control the rate of money, but for the very simple reason that what an interest rate is it is compensation for the loss of possession of money, one. In other words, you give it to someone else, like a bank, so it's no longer in your possession. It is loss of purchasing power over the period which you part with your money. And also, lastly, it is the risk that you entail by giving it to someone else that you're not actually going to get it back. That is what it's about. It's not the price of money as far as the depositor is concerned. So while this situation continues, we will have sterling under pressure. And today we see the sterling dollar rate go down to 1.1750. I mean, this is a new low for the last God knows how many years. I think it went slightly lower in the Brexit situation, but post Brexit we had a wonderful rally. We went up to 140, and now we have lost a good 20% of value in the sterling. Sterling is not alone in this. It is also true of the yen, and it's also true of the euro. And you will have seen that the dollar's trade weighted has been remarkably strong. It's not because the dollar is strong. It's just it is measured against crappy currencies.
Right.
And I'm afraid sterling is one of them. And it's because the Bank of England has got itself into this situation where it cannot raise interest rates sufficiently to stop the currency sliding. So that's where we are. When it comes to the rate of inflation, I mean, the retail price index is already up something like 13%. So, the CPI actually doesn't capture the whole story at all. And we have got all the other problems. I mean, we're beginning to see mortgage rates rise, which is beginning to impact on house prices, which is extremely unhelpful in terms of stimulating the consumer, that is for sure.
Right.
We've also got another problem, and that is London is the financial center, ex-New York, for the rest of the world. And particularly, we clear pretty much all the interbank euro transactions for the commercial banking network, not the central banking network, the euro system. And that's all done through London, which basically means that London has all the Eurozone commercial banks as its counterparties. It also has the Japanese banks. It also has quite a lot of the American banks. But London has a huge, great problem insofar as this financial whirlwind to which the world is now exposed is likely to center on London. So I'm not hopeful, really, for the immediate outlook in London. I think we've got a number of factors which actually could be really rather nasty for us here.
If you enjoyed this video clip, click here to watch another one you should like.